Adjunct Professor of Economics for Masters and Doctorate programs at Monarch Business School, Switzerland. Professor Rena serves as the Honorary Country Director, South Africa, for the International Relationship University. He published more than peer-reviewed journals and 35 book chapters in his credit. And he published more than 150 articles in newspapers and magazines and websites, and presented over 50 papers in national and international conferences and seminars. He visited more than 300 colleges and universities across the globe. So with this brief introduction, sir, I would like to once again welcome to this webinar. So welcome, sir. Please continue the proceedings, sir. Please, sir. Professor Rena, sir, please take over.
Well, good afternoon, colleagues. Thank you very much, Professor Prasanna, for that kind words. Let me take the opportunity to thank the Vice Chancellor, Professor Gurmeet Singh, to whom I met is India. So the list goes on. UK and maybe other countries like Canada, Australia will also follow in the list. These are the top 10 economies in the world. They also do a great amount of banking business, in fact, because of the value of their economic size. For instance, American economy alone contributes about 25% of the global wealth or global income or global GDP. So American banking system, probably in terms of the size of the assets, this and that, it could be also one of the biggest in the world, JP Morgan and so on and so forth, Bank of America and so on. So we'll touch upon those aspects a little later. Now, this is how the world looks like. And this is, now if you look at the foreign currency market, the foreign currency market or foreign exchange market is one of the biggest markets, or the biggest market in the whole world. Actually, it is close to $6 to $7 trillion money that has been exchanged in 24 hours time. So imagine the situation that we have got an income of the world which is about 90 trillions, about $6 to $7 trillion that have been exchanged with this foreign exchange market on daily basis. So one can imagine the business that we are doing and the international level. So that is a kind of point that we need to remember here. Now, if you look at the other important banks, if we take the history of the banking system, we all know that the different information, the Google and also the real statistics or real history of the banking business. We can talk a lot about that history, but I'm not going to touch the details of it in the interest of time. Now, people, they say that the real banking started in India and maybe in China and so on and so forth. Italy also contributed immensely for the modern banking system with the Lombardy and so on and so forth, where the people, even in the temples, people, they try to save some of their belongings, and probably they could take some kind of borrowings and money and so on and so forth. The money was not even there probably more than 1,000 years ago. So the paper currency, when it was invented, and that's where the people begin to realize China and India are the great contributors for the global economic development, the transformation of the banking system. Now, as Professor Velu Mariappan also indicated, that Pondicherry University is one of the prominent institutions where it has started a program in the banking and finance industry. In fact, while I was working as head of the department of the banking and finance industry, that was during 1997 to 2004. I mean, I was not a qualified banking specialist as such. I must agree with that. I'm an economist with some kind of finance background, but I could able to manage the department because we do not have the specialized skilled personnel who can work in that particular arena, in particular department. So I'm glad that Pondicherry University is one of the pioneer institutions in the country that could able to produce the graduates that can serve the banking institutions not only in India but across the world. So if you look at that, the banks in India, for instance, there are more than 45 banks that are international banks. Actually, we could be having a lot of nationalized banks. We could be having a lot of private banks, including Axis Bank, and we have the Yes Bank, and we have also maybe the Mahindra Bank, and so on and so forth. But we have State Bank of Hyderabad, State Bank of India, and we have Union Bank, and so on and so forth. So these are the different banking institutions which are being run by the public sector, probably for the past several decades. And if you look at the banking institutions that are foreign banking institutions or international banking institutions, we have got more than 45 institutions working in the country, and more than 300 branches in major cities of India, from Gujarat, Ahmedabad to Hyderabad, or to Pondicherry, or to maybe Chennai and Bangalore and maybe Calcutta and other Bhubaneswar and so on. So there could be number of other branches that are been in operation that are being run by these foreign or the international banks. So I just would like to delineate the difference here. There are Indian banks within the private and the public sector. They also do the international operations or international banking operations, but these are the foreign-owned banks, like I said, maybe Citibank, for instance. A Citibank is known as City Never Sleeps. That is the slogan, that is the icon that they use. And with that icon, they become the popular Citibank operations in India. Is one of the major foreign bank operations that Citibank does. Now, we have Bank of America. We have several other banking institutions, even London-based banks also, they have been located in India. So I'm not going to touch the details of those 45 banking institutions. Now, these banking institutions are probably trying to help the customers. Who are the people who are trying to be benefited from these operations? We have got the stakeholders or the clients, and the clients basically, they could be individuals like you and I. When we wanted to travel to other countries and we do not have a foreign currency with us, and those banking institutions, they will help us. It's not only that, there are India is the country which receives the largest amount of remittances across the globe. Lots of Indians, more than 20 million Indians working in different countries in the world, particularly in America and even South Africa. South Africa could be the only country in the world where large number of Indians stay, or Indian origin people, they stay after Indian land per se. So now, if you look at that realistically, we have got the institutions, banking institutions that are been spread across the globe, and they also serve the purpose of the remittance or the foreign exchange or the international banking operations and so on. So Indians living abroad, they could send on an average more than $500 billion money to India on a yearly basis. So that is more than the national income of South Africa, for example. South Africa being the second largest economy in the African continent, whereas Nigeria is the first largest economy. It is probably by and large the same amount of money that Indians living in other countries, they contribute to India in the form of remittances, the same amount of money by and large Nigeria generates, and that made Nigeria as the largest economy in the whole African continent. So we got 55 countries in Africa, and of 55 countries, of course, we proudly say that our South Africa is the country which used to be the largest economy in the whole African continent, probably a decade ago, but no longer now. And now we still remain the second largest economy in the whole African continent. So we still proudly say that. So this is just to give you the overall picture of African side, in African continent, how the largest economy is. Colleagues, can you hear me? Yes.
Yes, sir. Yes, sir.
That's right. Yeah. So just to give you a picture that Nigeria one side and South Africa on the other side, these are the two major economies in this continent. They contribute almost 48% of the total income of the continent. So I'm trying to unpack here. I'm trying to make the comparison here that we have countries like Burundi, for instance. Burundi's total income is only $3 billion income. Now, $3 billion, probably maybe Jindal's wife is considered to be the richest lady, richest women in the Asian continent with about $11 billion. So her income is probably more than 3 times more than Burundi's national income. So we do have disparities here. Now, just to make to make it clear that we have in African continent 55 countries. All in all, we contribute to the global income, which is about close to $3 trillion money. That's what we contribute to the global income as a continent. Though we are the second largest continent with about 31.6 million square kilometers land, and we are double the size of Russia as a country. So now India as a country, which is the 5th largest economy, that is also contributing, for instance, about $2.8 trillion, by and large, same size of the African continent. So this is about the African side, and that is about the Indian side, maybe in general, the global economy looks like. So this is how the world operating. And whenever the world is operating, and we have got the businesses that are been linked up, and those businesses are also directly or indirectly influencing the international banking business. Now, the international banking business, JP Morgan, is considered to be one of the leading institutions or leading banking institutions in the world. And they also got their own probably ups and downs, particularly when you look at the global economic crisis or global financial crisis that we experienced in 2007 to 2008. And that's Lehman Brothers and JP Morgan. So some of those banking institutions, there was a complete collapse of the banking system. Now, that is one side of the coin, and the other side of the coin, the banking business are being affected badly, particularly for the past couple of years because of the pandemic that we are experiencing, the global coronavirus pandemic. Now, global coronavirus pandemic, it has infected more than 500 million people across the globe, and probably about 6.5 million people got killed by this virus. So banking business is one of the key businesses which are affected hugely with this coronavirus, and also the ongoing business war with Russia and Ukraine that also impacted. And then the trade war with China and also America impacted the international business as well. So these are some of the adverse impact that was being created due to the latest trends that we've been experiencing in the banking business. That is on the other side of the coin. Now, if you look at the what are the contributory factors who contributed a lot for this international banking business, and though we say that banking business is started somewhere around maybe 1200 AD, and the real modern banking system was started in England maybe in 16th, 17th century, or in Italy also in 14th, 15th century. But now the fact of the matter is that the real banking business has started and evaluated in the past 50 to 70 years down the line, starting from 1950s, just after World War II. And our real banking system, our international banking system, is probably developed rapidly for the past 70 years down the line. So now, who are the contributors for the international banking for its growth and its development? And maybe we can touch upon some of the key role players there. One is we have got the globalization. Globalization, internationalization. These are the two core pillars or core factors that could contribute for the international banking business. If you look at the globalization, though globalization keep coming from time to time, and but globalization is a pretty old concept, more than close to 100 years back, maybe in 1914 to 1918, somewhere there during the World War I. That's when the globalization practices were being maybe developed, but because of the transportation facilities that are not been improved significantly 100 years ago, and the globalization was not known to the world that time. So globalization now, particularly for the past 30, 35 years, maybe 1990s, early 90s, and so on, globalization is rapidly contributed a lot for the international banking business. So we talk about the internationalization. Students from India, for instance, hundreds and thousands of students, they go and study in America, in Australia, in New Zealand, in Europe, and UK, and many other countries across Canada, and so on. Indian students alone contribute more than $5 billion money in terms of fees that they are paying to different institutions. So this is again going through all this business is going through the international banking system. Now this is a kind of, the Indians are contributing one side and Chinese also contributing because of the population size. Indians and Chinese in the overall population, if you look at, we got, as I indicated to you earlier, that we have about 7.9 billion people. Out of that, for every 100 human beings living on this planet, probably Indians and Chinese could be about 21, Indians could be about 18, 19, and together we are about 40, 42 people coming from only these two countries. So eventually, Chinese bank is the largest bank in the whole world in terms of the assets, in terms of the volume of trade, in terms of the volume of business, in terms of the value of money that have been rotated within. So that is why the Chinese bank plays, and of course American banks and Canadian banks and all other banking institutions also play a vital role in the whole business. So I would like to emphasize here that we got internationalization one side, and we also got the globalization on the other side. They are the contributory factors for this international business, particularly for the past 3 to 4 decades. Now, if you look at some of my colleagues from Pondicherry University, they would agree with me that we got economic reforms that are being embarked by P.V. Narasimha Rao government in 91 actually, 91 July. And if we look at the dollar exchange rate, rupee and dollar exchange rate today, we are sitting with about 80 rupees for $1. Now, previously, in 1991, about 31 years ago, when P.V. Narasimha Rao embarked, before he started his reform agenda, and $1 is equal to 18 rupees, 18 rupees. And immediately on 1st of July, and that was 18 rupees, when the devaluation was taken place, that went up to 25 rupees, just in 3-4 days' time. So that is the devaluation, and it has got a serious impact on the economy now. For the past 31 years, if you look at 25 rupees too, now we are sitting with 80 rupees. So realistically, India celebrated 75th Independence Day a few weeks ago. Now, for the last 75 years, if you look at the rupee value and dollar exchange rate, around maybe 75 years ago, we got almost one-on-one basis, or maybe 4 rupees. In 1966, when we devaluated the currency, that time we got 4 rupees for $1 actually. And prior to 1966, probably we are by and large equal to each other. So you can imagine that 75 to nearly 80 times our currency got devaluated in terms of the US dollar. So that is also US dollar. Now, I also would like to unpack, it is not only the internationalization and the globalization, these are the contributory factors for the international banking. And besides that, when I'm just trying to touch upon some of the important aspects of the Indian economic reforms embarked during P.V. Narasimha Rao government, and that was also LPG, liberalization and privatization and globalization. So LPG also contributed one way or the other way for the international business. So these are some of the factors that are able to contribute immensely for the international banking business, not only for the Indian subcontinent, but also for the entire international banking institutions across the globe. That's why, those 45 banking institutions with 300 branches, they could able to come and work in India peacefully because of all these changes that have occurred. Now, if you see the other side, that we also got OPEC countries, Organization of Petroleum Exporting Countries, where are probably about a few members, maybe 12 to 14 members are there, including Saudi Arabia is one of the leading producer of petroleum products. And we got Indonesia, we have Bahrain, and we have Nigeria from African side. We used to have Benin at one stage, and a few other African countries. They are the OPEC members. So the OPEC members, whatever money, for example, Nigeria is the largest producer of oil from African continent, and though it receives more than 70% of its export revenue through the oil sales, but now whatever the money that is remain as a surplus, they are going to invest on this international banking business. So they are contributing immensely for the international banking business in that manner. Now we have Swiss banks, for instance, some of the film actors of India, maybe all the top politicians and film actors and all the corporate giants like Ambani and Adani and so on, billions and billions of dollars also been saved in the Swiss bank, where you don't need to have a lot of regulations as far as the identification is concerned, as far as the opening of the accounts is concerned. They're a little bit flexible. As long as they receive the money, they try to open the account. You get the account number, nobody knows who is holding that account number, so they maintain certain secrecy there. I'm not going to touch the details there. So like that, there are so many international banking institutions. They try to promote the international banking business. The international banking practices, if I take you to, I've been to more than 40 countries across the globe for the past 2.5 decades. And my experience says that I was working in Papua New Guinea as the head of the department of Papua New Guinea University of Technology some time back. And I was banking that time with ANZ Bank, Australia and New Zealand Bank. And when I come to Namibia and South Africa, I'm banking with APSA. I'm banking with probably First National Bank, FNB. We have banks like Standard Bank, we have Net Bank, and we have African Bank. We have recently started Discovery Bank and Capitec Bank and so on. So these are the banking institutions. I also banked with Indian banks while I was living in India some time back. So now Andhra Bank and Union Bank and so on and so forth. If you make the comparison of the banking business practices, whether these banking institutions are driving towards the welfare of the customers or they are driving towards the welfare doing the business. So we need to understand these 2 points here. So welfare is not their concern. Banking businesses mostly welfare is not their botheration, because welfare is kind of maybe an activity that will be looked at or looked by the government, maybe respective governments across the globe. Banking businesses, they've only meant the business. They don't look at the welfare of the customers as such. So just to make a comparison of my personal experience of these different banking institutions that I'm banking with. While I was banking in India, for instance, when you take your own money, when you withdraw the money, there were no bank charges. You can withdraw the money without paying any bank charges. That was long time back. Now, if you look at the Australian and New Zealand bank, also ANZ Bank, when I was banking there were no banking charges. You deposit your money into your account, you withdraw your own money from your own account, there are no charges. But when I come to this side of the world, Southern African side, SADC region, in the SADC region, South African Development Community, SADC region area, I'm surprised when I come here that the moment when you put the money in, although it is your own money, you are putting into your own bank account, but there's a bank charges. They say cash handling charge, whatever the case. Even if you put it via ATM also, you will be charged. So, and then if you want to withdraw the money, it's your own money actually. You have to withdraw. You got the right to withdraw your own money without having any kind of penalties or kind of any bank charges. But unfortunately, in this side of the world, in South Africa or in Namibia, or maybe you go to Zimbabwe or probably a few other countries around this area, you will be charged for every activity. You will be charged. So, if you compare these things, I was banking in Papua New Guinea, I was banking in India, I was banking in a few other countries, and that was not the case. So the banking operations differ from country to country, place to place, bank to bank. Now, realistically, all these banks in South Africa, they operate by and large in the same manner. Maybe somebody like Capitec Bank will charge a little bit lesser than what Absa Bank is charging, or maybe Standard Bank is charging, or Net Bank is charging, but everybody charges the same thing. So it is like a oligopolistic model. In economics, we say oligopoly model, that all these banks, they will operate on the oligopolistic model actually. So you don't have a choice. Either you go to bank A or bank B or bank C. There's no other way that you can able to do your banking business. So that is why I'm saying this point here is that banks, one side, they should be customer centric. They should also look at the customer welfare, but more than the welfare of the customers, they are looking at the business. I remember that while I was working in Namibia, I was going through probably I was taking some of my students to the bank, and then we were trying to interact with the banking officials in Namibia. And then we are surprised to note that the FNB, First National Bank, the CEO of Namibia, is tax and benefits. If you look at that, that is probably more than 2-3 million rands or 2-3 million Namibian dollars actually. And that is far, maybe about 5 to 6 times more than the salary of a professor, a decent professor. So if you realistically look at the business, I'm talking about not about the salary, the tax and benefits. So this is how they try to exploit the customers as much as they can. So in a sense, in a true sense, if I would like to comment here, that I always remember Karl Marx's philosophy. Karl Marx says that profits are always considered as the legalized robbery. So legally, these banking institutions, they are licensed to steal the money. It's like a daylight robbery, in fact. Maybe banking institutions may not like this comment, but in actual fact, that is what is happening. So, ladies and gentlemen, that is what the concept of the business and the concept of the welfare, they are two different. Though when you are doing the business, it is the customer, through his hard-earned money, his life savings, he is trying to help you as a banking institution. And you mustn't take it for granted, and you take the customer for a ride and take whatever you like, you can charge and you can steal. That is not a good practice, actually. It has to be changed. Now, unfortunately, in the Southern African countries, we do not have a competitors. If maybe there could be some other banking institution, they're willing to come and start the operation, but these conglomerates, these oligopolistic model banking institutions, they are trying to stop those penetrations, actually. So this is one of the examples I would like to compare with you, that for everything, even of course, Indian banks nowadays, they also begin to follow the footsteps of the Southern African banks, actually, unfortunately, which should not be the case, actually. So there could be, now everybody is looking at the business more than the welfare of the customer, which is not going to be sustainable. These are all, you see, top heavy, bottom weak models, they are not going to be sustainable. Now, if you are creating a scenario, it's one-side business that you only want money from the customer, you don't want to help the customer the way you're supposed to help, that is not going to be sustainable. So this is my personal comment. Maybe you may disagree with me, that, the actual fact is that bank and the customer, whether the customer is an individual, a customer is the government, a customer is a corporate sector, or a business entity, whoever they are supporting each other. So they should work like, they should be the two sides of the same coin. They should be interrelated or intermingled. They should work together hand in hand in the welfare, in the best interest of the customer as well as the banking institution, not the one side only. So that is my point I would like to mention here. So we do have so many other, I think in the interest of time, Professor Mariappan, how much time do you still have?
Yes, sir. You have the time. You can continue.
Okay. Yes. So
originally we planned between 2 and 3. Now we delayed the session, therefore another 15
that's
minutes.
Right. That's right.
Want, sir.
Okay. Another 10 to 15 minutes.
Yeah, please.
Correct. Yeah. Yes. Yeah. That's fine. So we do have. I'm not going to. We are all banking experts yourself. I'm not going to touch upon the operational style of the banking institutions, but usually the phenomena is that what do you call if you look at the different type of banking institutions, so that maybe they operate on different scales or with different purposes. We do have maybe a banking institution that can be a land development bank, which is particularly meant for the land development or just giving loans for the farmers. We do have other banking institutions such as housing development bank that is only meant for the housing development purposes or housing projects. We do have banks for the rural development or maybe entrepreneurship development purposes. We also have banking institutions. So we do have maybe educational finances, health finances, also part and parcel of the banking operations, banking business. But there could be some banks that are also exclusively developed on the ground of the educational finances. So there are multiple banks, cooperative banks also we have. India is one of the pioneers among the cooperative banking institutions. So the list goes on. It's not only within the commercial banking business, we have multiple bank businesses that are been started. Forex bank also, we have only their main duty is that to deal with the forex or the foreign currency exchange mechanisms and so on. So that is how these banking businesses are evaluated over a period of time, and we see the banking institutions what we see today. And as I indicated to you that the stock market business is also one of the important businesses across the globe. But the foreign currency market still remains the largest market in the whole world, actually, as I indicated to you earlier, that it's about 6.5 to 7 trillion money that has been exchanged over a period of time. So we do have a lot of people that, now for instance, exchange rate is also one of the important aspects that will create turbulences for not only for the customers and the businesses, but also to the country in general. Now, South Africa, if I take the example here, that maybe a year ago, the exchange rate, or maybe even 6 months ago, the exchange rate for $1 to South African rand, we used to have maybe about 13.5 to 14.5. That is the exchange rate we always, fluctuate in between. Now, today we got about 16.7 rand. So that is absolutely created a lot of fear among the investors who wanted to invest the money internationally in the form of foreign direct investments and so on. So that will create some lot of problems. Even South African students studying in other countries is also will be detrimental for those students and their parents also. So the exchange rate is one side is creating a lot of problems. Like I indicated to you that maybe in 1966 the Indian exchange rate per dollar, and in 2022 the exchange rate is also probably increased so rapidly. And at one stage in South Africa, for $1, and the rand was more expensive than the dollar actually. So if you look at the 62 years of rand history, South African rand has started maybe 1960s or so. About 62 years down the line, when rand has started, probably we are more expensive, more powerful currency than the American dollar. So the mechanisms are being changed, and now things are being reversed. Even in 2001, about 21 years ago, I still remember that we used to have the exchange rate, which was about 5.5 per $1. Then out of the devaluation, then it went up to 13.75 in the same year, 2021. Now again, South African government or the South African Reserve Bank is trying with its monetary policies and with its effective measures, is trying hard to stabilize the exchange rate. That's why it is always fluctuating. Maybe 10 years ago, it was $1 is equal to, it was about 8 rands. So this is about the exchange rate mechanism, which will also create a lot of disturbances, and it destabilizes the international banking business. There are people, they absolutely buy and sell the currencies, foreign currencies, and they make business. And realistically, if you look at the euro currency, that is one of the important currencies in the world after UK pound and American dollar and euro currency. Euro currency, if you know the history of euro currency, probably about 2 decades ago it was started. When it started, it is maintaining its dominance over the American dollar. But for the past few weeks, what is happening, if you look at the history, maybe because July, August statistics, exchange rate statistics, now for the first time, American dollar is valuing more than the euro currency. We used to have $1 is equal to 1.2 euros. 1 euro is equal to 1.2 dollars most of the time for the past 2 decades, and that is being changed. And maybe a few weeks ago, dollar and euro became equal to each other. Now dollar is a little bit ahead of euro in terms of the value. So all these changes are occurring maybe because of the war and the fuel crisis we experience. I think Russia is one of the important exporter of the oil resources to most of the European countries, and maybe that is also creating now because of the Ukraine and the Russian war, and that is also creating problems for that. Now, inflation on the other side is also creating problems for the global or the maybe international banking business. Now, in terms of inflation, we economics people, we always say that too much money chases too few goods. That's what the definition of economics would say. Now, meaning that you take the money in a basket in order to purchase the goods that can fit into your pocket. That's what the inflation. Now, a country like Germany, for instance, it was worst hit 100 years ago by the inflation, and where people, they used to burn the currency notes because currency notes are cheaper than buying the wood. So buying the wood is expensive. That is why they couldn't able to buy the wood and burn the wood to protect from the cold, but they were burning the currency notes because they think currency notes are cheaper than the wood itself. So this is the situation. Not long time ago, Germany is the fourth largest economy in the whole world, and Germany experienced this situation about 100 years ago, even 1923, somewhere there. So inflation, now European countries, most of the time inflation was between 1 to 3%. That is the inflation that they are experiencing. Maybe most of the developed countries, they go maximum 4-5%, not more than that. Now, today, if you look at the statistics from UK, from Germany, from France and Italy and many other countries, the inflation is crossing 2-digit already. It is 10, it is going to be 18, according to the economist forecast recently in UK, probably in the coming 4 to 6 months' time, UK will experience 18% inflation rate. So these are the contributory factors that could adversely affect the international banking business. Now, international banking business, they are facilitating the trading, particularly the international trade, international finance, and so on and so forth. So they are contributing immensely for the customers one side and also for the businesses and the governments on the other side. But what is happening is that there are also risks that are being involved. There's a lot of risk. Now, the risk is that all these banks, although they provide not only the customer-centric services, but also there are so many added services that they do provide to attract the customer. That is absolutely fascinating. But at the same time, there are some of the international banking institutions, what they impose is that in order for you to open an account with them, you need to pass through lots of hurdles. They may say that this document, that document, which you don't even possess. And they create a lot of barriers for you to open an account. Once you open an account with the bank, then they will impose the restriction that you maintain a minimum balance. So if you don't maintain the minimum balance over a period of time, then your account will be closed, or you will be imposed a fine on that. So these are the kind of, and also there's a lot of risk involved, particularly in this recent arena, that most of the people, innocent people, they have been probably, they went into this kind of strategies that are being developed by some of the Nigerian guys, some of the guys from even different other countries across the globe. So they're trying to trap those people and steal their money without having any barriers. So there's a huge risk also in international banking business. I think with the interest of time, maybe I would like to touch upon and by saying that I must congratulate the Pondicherry University for running that particular specialized skill-based department at master's level and the PhD level, banking and technology. And we need a lot of bankers, and we need a lot of finance experts and economists who can be, having the dexterity that is very much essential for most of the countries in Africa, for example. They do not have banking business as such. Now, so all these stalwarts and all these experts can not only serve Indian arena, but also the other parts of the world. And with this, a few remarks from my side, ladies and gentlemen. I would like to thank Professor Mariappan, the head of the Department of Banking and Technology, and Shekhar, and also Professor Prasanna, and all other students who are patiently listening to me for the past probably about an hour or so. Thank you, Rena.
Thank you. Now, we've opened for discussion. Students and other faculty friends, if you have any queries or additional points to suggest, you are welcome. Another 10 minutes we can spend. Over to the students and scholars.
Sir?
Yeah, Deepak, go ahead.
Sir, despite the America and all the European countries putting a lot of sanctions on the Russia, Russia is still managing to fund the war in a very good manner, and the war is still going on. But the US and European countries actually expected the war to end very soon, but that hasn't been the case so far. So, what could be the reason behind that?
What is the question, Deepak?
Sir, despite all the sanctions
Russian
that are
war
put on Russia, they are still being able to fund the war.
Sir, his question is, despite a lot of sanctions against Russia, still Russia is able to manage and fund the war and continue the war.
Okay, and what is the question? Is it only a comment or a question? Is there any question?
He's just asking how it is possible, despite having this much of financial stress on them, how it is possible for Russia to manage their economy, or manage their banking, manage their funding.
Excellent. Thank you very much, Deepak, Rajan, for that question. I just wanted to mention a few points here, that Russia is the largest country in the whole world. The size of the Russia is more than 17 million square kilometers land. No country in the world could have 17 million square kilometers land. Now, India, for instance, is about plus minus about 3.2 million square kilometers land. So you can multiply. And how many times, maybe 4 or 5 times, Russia is bigger than India. India is although called as a subcontinent. And remember that Russia is the only country has got more than 9 time zones within the country. Now, if you take the former USSR, maybe United Soviet Socialist Republic, and with Kazakhstan, Ukraine, and all those kind of Baltic republics, this and that, and that time it would have been massive actually. So, given the existing country's situation in Russia, Russia has got abundant resources. It has got more amount of oil resources than any other country in the whole world, actually. That's where Russia is pumping oil resources to most of the European countries. Now, because they are imposing the sanctions on Russia, and therefore the inflation is affecting, food prices are affecting, and the prices of food and the oil and fuel, everything is going up. Not only in those European countries, but also we are being affected in Africa, in general. In African country also, our oil prices, we used to buy a 2-liter oil price for 50 Rand at one stage, maybe a year ago. Now we are paying 120 Rand for the same thing. So this is what is happening because of the war. Now, for the past 6 months, the war started in February, and now we are sitting on 26th of August 2022. Almost for the last 6 months, the war is still going on. So Russia could able to manage independently, solely, without having any international support. Now, India and Russia, they are good partners. But India should maintain a neutral kind of, stand because of the international pressures. And if all the BRICS nations, for example, now South Africa is also part of BRICS nation. Brazil, Russia, India, China, and South Africa. Even BRICS nations also could not able to contribute because they think that their own internal politics, internal matters. They don't want to involve. So that is why everybody is standing out, and Russia is alone fighting for this. But Russia is not an easy country. And remember that it was a superpower, and probably before 1990, and during the Cold War, 1970 to 1990, for about 20-30 years, it was a competitive power, political power in the whole world, which is all going against the American this thing. So that is why, in terms of science, technology, engineering, in terms of the resource base, Russia is still powerful and it is capable. So that is why it is could able to fight alone for the past 6 months, despite the whole world, France and America, all the other developed countries, NATO countries, they are supporting Ukraine, and all other countries one side, Russia alone on the other side, they are still fighting. I hope I answered your question, Deepak.
Yes, sir, it's clear. Thank you, sir.
Hello, sir. Sir, I posted a question. Can you please see that because my network is not good?
Shashanka, your voice is a little bit noisy. Can you yeah, go ahead.
Sir, I posted a question in our chat, sir, our mid chat, sir. Can you please see that?
I don't know. Somebody can read that question for me, and let me just look at that. How you see the future of foreign bank current financial crisis in Sri Lanka and Pakistan? Well, that is an important question. The question is asked here is that how do we see the future of foreign bank in current financial crisis, particularly in Sri Lanka and Pakistan? Well, Sri Lanka and Pakistan, they were doing quite good maybe a few decades back, particularly for the past few years down the line. Sri Lanka, if you look at the latest trends, what had happened in Sri Lanka, the president ran away, and then people, they are trying to go into the homes of the president and trying to take over and things like that. So this definitely will impact. And Sri Lanka is the country which is typically depending upon the tourists. And Sri Lankan economy, for instance, about 70 to 80% of the total revenue that was coming from the tourism sector. So for the past 2.5 years, tourism was no longer actually in nowhere in the world, and tourist sector alone lost more than $6 trillion money in terms of the airline industry, in terms of the hotel industry, in terms of the all other subsidiary industries that have been associated or indirectly or directly linked with the tourism industry. About $5 to $6 trillion are just vanished like that across the globe. Now, Sri Lanka definitely has got that kind of shock, and the shocking waves gradually developed. That is one shock. It is a tourism industry which were badly impacted with the coronavirus pandemic. The other side is that they're trying to give their head to China, and meaning that you can do anything and everything with me. That is the level that they went down. That is not good. For any sovereign country in the world, giving your head and your body and you give your control, the controlling mechanism of yourself, you are giving to somebody else. Somebody can play just like that. So that is what had happened just to brief you, in Sri Lanka. Pakistan also, it has got its own political problems. It has got its own ethnical problems. But Pakistan, sometime back when it was separated from India in 1947, probably in the first few years, it was doing very well in terms of their education, in terms of the science and technology, because it was same land. It was only separated from India or got independence. So whatever India is the largest economy in the whole world, for not for 1 year or 2 years, but it's for almost 1,800 years, ladies and gentlemen. So India and Pakistan, Bangladesh, maybe Sri Lanka or Afghanistan, and maybe some portion of Indonesia, Burma or Yangon or Myanmar, they're all part of in one country, that is India, that is Indian subcontinent. And so they were been enjoying the power of being the largest economy in the whole world for more than 1,800 years. Now, because they separated, because of the political turmoils, and eventually they're becoming weaker and weaker. Now look at the Pakistan rupee for $1, and also look at the Sri Lankan rupee for $1. So much difference between Indian rupee and also the Pakistan and Sri Lankan rupee. Now, to be specific for your question, that there would be dire impact, because if one country, international banking is like a Pacific Ocean. Now, major banks, major countries, as I indicated to you, they are having the lion's share in the business, including India. But doesn't mean that Pakistan and Sri Lanka is not contributing for the international banking business. They do contribute. So eventually, because of this crisis one side, all the crises that we are experiencing, and eventually the amount of money that we are losing on everyday basis, the people that they got unemployed in South Africa alone, about 4 million people got unemployed because of the pandemic. Now, India alone, more than 150 million people got unemployed. So imagine the situation. The same goes with Sri Lanka. The same goes with Pakistan. Even in America, more than 50 million people got unemployed. So whether you are a rich country or a poor country, but you are still part of the system. Out of 200 countries that we have, maybe small countries like Nauru and Tuvalu, and maybe Seychelles, small countries such as that. But everybody contribute. Everybody contributes some drops in the ocean, like a Pacific Ocean. So international banking business or current international financial crisis will create more problems, more turbulences, and these problems of these Ukraine-Russia war and the problems that have been occurring across the globe all contribute for the failure or for the detriment of the international banking business. I hope I gave you some answer or some clue for you, Shashank Kumar.
Thank you, sir.
Yes, Bar. Any more interaction?
Yes, Dr. Usha.
Sir?
Yes. Vartini, yes. Go ahead.
Yes, sir. Yes, sir. Sir, you said about the euro currency. Is euro a legal tender to all the countries, sir?
Not really. We have in the eurozone we have got 27 countries. They are trying to expand it further to Moldova and also to Ukraine and few other countries. But it's only operational in 19 countries out of 27. Vartini, is that clear to you?
Yes, sir. Yes, sir. I got it, sir.
Although euro is internationally acceptable currency or convertible currency, for example, as I indicated to you that we have UK pound and we have got the American dollar and euro currency and also Japanese yen. These are the 4 convertible currencies in the world. Now, out of that euro, as I indicated to you that 27 countries that we have in eurozone, and though they are the members of the European Parliament, European Union, but 19 countries are the one which are following the euro currency. There are countries like Dutch guilders in Germany. They may have their own. Every country they got French francs. So every country they got their own currency, but 19 currencies they follow the euro currency. I hope I answered you, Vartini.
Yes, I understood, sir. Thank you.
Yes, Dr. Usha, you wanted to ask something?
Yes, thank you so much. I'm so sorry. I tried to ask a question, but I exited myself by mistake. I just want to say greetings from South Africa. And when I spoke to Professor Rena this morning, he told me Pondicherry is one of the most beautiful villages, most beautiful cities, and he told me about the French colony. So I'm sitting here very jealous, about this city that you're in, and I just want to appreciate, Prof. Rena's presentation. It's absolutely excellent. He's a brilliant speaker, very distinguished, and I was a former member of Parliament. And about a month ago, I was actually nominated on a banking board. So that's why I sat in on this meeting, because I took down some notes like all the other students, and I learned a lot. And, I just want to say thank you very much for inviting me. And I truly appreciate him, not just as a colleague, but as a friend. He has this mind that has so much of knowledge. It's almost like a repository, and his ability to articulate and to give off himself, his time, his knowledge, his intellect to the students and back to India, our ancestral home. I think that's a great blessing, and you are so fortunate to have a person of his caliber. So I'm very, very happy to be part of this. Thank you so very much.
Thank you, Dr. Usha. Thank you for those kind words. Yeah, one day definitely you will visit Pondicherry, and I think Professor Mariappan is taking note of that.
Yes.
He would invite you. We also need parliament members who has got a multi-dimensional knowledge, not only in the political arena but also in social and economical and various other cultural aspects as well. Of course, probably if you take 170 years history, before Mahatma Gandhi, when Mahatma Gandhi comes to to South Africa, he lived in South Africa for almost 2 decades. And that is when, our Indian laborers, maybe to work in the sugarcane industry, there are a lot of influx of Indian people that are brought in. Now we got more than 1 million people in South Africa are Indian origin people. So they are our people actually. So we welcome, our people anytime, and they are part of our culture. They are part of our, growth and development.
Certainly, Dr. Usha, with your connect with the Parliament experience, and also now recently, as you mentioned, connected to the banking industry very closely, and we being a banking technology department, certainly there is a lot of synergy between your role and our department. And as you have decided, one day we will meet at Pondicherry University campus, and a suitable occasion we will find out, and we will invite both Professor Ravinder as well as you to be part of our program here in the campus. Certainly, looking forward to you.
Thank you.
Yeah.
Thank you.
Any more questions from the audience? Otherwise, I think we have taken close to about 1 hour 30 minutes in place of 1 hour originally we have requested from Professor. If no more questions are there, from my side, formally, a student is ready to say the vote of thanks. But from my side, as the head of the department, and also my senior colleagues and faculty friends, and others who are on the online, other than my students in the online platform, we also found a few other people who have joined and listened to your talk in the online program. And the number may look like around 60, 65 in the online number. If you look at that, we have asked each student share 1 laptop with 2 students with 1 laptop. So actually, closer to 110 students of ours, plus around 15 faculty, and many other online friends have joined and listened, and hopefully benefited immensely from your vast experience. You have put the whole global banking development perspective in nutshell in less than 1 hour time. We certainly from our side appreciate your presence and sharing your rich experience to our student, and we will be looking forward once again to listen to you, maybe more occasions through online as well as in the offline. And now I request the student volunteer to propose the vote of thanks.
Yes, sir. Thank you very much, Mr. Shekhar. I invite Deepak Rajan from MBA Financial Technology to propose.
Shekhar, your audio is making a lot of noise. Yeah. Who is the student volunteer? Please come forward.
Rajan, please come forward and propose.
Deepak, go ahead, Pak. Deepak, are you listening? Today it so happens that we are all scattered in different buildings and different classrooms and different spaces because of the internet connectivity issue. Unfortunately, today it happened. So, Deepak, are you able to hear?
Yes, sir. Yes, sir.
Yeah, please go ahead. Without
so I'm Deepak from MBA Financial Technology. So on behalf of the banking technology department, I would like to convey my heartfelt gratitude towards Professor Ravinder sir for conducting such a valuable and insightful session for us. And the session was really full of very, very helpful knowledge, and it provided us with a very deep insights into the banking and economic condition of around the globe. And sir also mentioned about the current economic situation that's prevailing in the world right now. And it was really a session completely filled with very valuable information. Thank you, sir, for sparing your time for imparting this knowledge to us. And I would also like to thank Usha ma'am for joining this meeting. And I would also like to thank our HOD for conducting this, HOD and Shekhar sir and all the faculties for conducting this webinar, and it was really helpful for all the students. Thank you, sir.
Very nice, Deepak. So thank you very much from our side once again, both Professor Ravinder and Dr. Usha and all other colleagues, friends who have joined on this online platform. Hope to meet again, sir.
Sure, sir. Thank you very much, Mariappanji and all other colleagues. Thank you.
Thank you, sir, Professor Ravinder, Rena sir, and Usha for spending your valuable time. Also, I would like to thank all the participants from outside and inside the Department of Banking Technology. So with these few words, I would like to conclude this webinar. Thank you very much.
Thank you. Bye now. Bye.